Every money you deposit in a bank secretly starts working for the bank, not for you. Most people think banks only keep our money safe, but in reality, banks are powerful money-making machines that control the entire economy. Let's dive into history a little. Long ago, people kept gold under beds or inside lockers, but fear of theft created the need for trusted money keepers. That's how banks were born. Banks started over 2,000 years ago with goldsmiths who issued paper receipts for gold. Those receipts slowly became money. At its core, a bank does one simple thing. It takes money from savers and gives it to borrowers, earning profit in between. When you deposit money, the bank promises safety, liquidity, and a small interest in return. Savings for daily life, current for businesses, fixed deposits for returns. Each deposit serves a different purpose. Here's the shocker. Banks don't keep all your money. They keep only a small portion. Out of your deposited money, banks only keep 10% and lends 90%. This is called the Fractional Reserve System. Banks don't just move money, they create money through loans. Home loans, car loans, education loans. Loans are the biggest income source for banks. Banks pay you low interest on deposits and charge higher interest on loans. That difference is their profit. Banks carefully check your income, credit score, and history because lending is risky. Your credit score decides whether money trusts you or avoids you. Every bank is controlled by the central bank. Central bank controls money supply, inflation, interest rates, and protects depositors. Cash reserve ratio, or CRR, is the portion banks must keep with central bank. They can't use it. Statutory liquidity ratio, or SLR, forces banks to invest safely in government securities. Today, banking lives in your pocket. UPI, net banking, mobile apps changed everything. Banks power all payments: UPI, debit cards, credit cards, wallets. When banks lend more, businesses grow, jobs increase, and the economy expands. During crises, fear spreads fast. That's why trust is everything in banking. If everyone withdraws money together, even strong banks can collapse. That's why deposit insurance exists, to protect common people. Banks also earn from service charges, not just loans. Long-term deposits give banks stability and planning power. Banks protect money, investments grow money. Knowing the difference is financial wisdom. Banks are safe, yes, but they won't make you rich. Use banks for safety, payments, and emergencies, not for wealth creation. Banks are powerful tools. Either you understand them, or they quietly use your money. Learn how money works, because financial ignorance is the most expensive mistake. Subscribe for simple finance truths most schools never teach.